You were listening to chartingwealth.com's comprehensive review and forecast for the week beginning Monday, the 25th of June, 2018. Our book is available for sale, Charting Your Way to Wealth, and we have decided that midway through July, we will be offering a special short chart trading lesson to everyone who purchases the book. Now, if you've already purchased the book, we've got your email address, you're on the list. If you purchase the book, we will also put you on that list and provide the short chart training to you. And that is going to be very, very special. It uses the 2-hour chart, and it uses, of course, our derivative oscillator in particular, along with our price percent oscillator. But it's a little different than our typical training and the typical way that we look at the charts, but it's short chart training. We're going to offer that to the folks who purchase our book, Charting Your Way to Wealth. If you look up at the right-hand corner of the screen right now, you'll see a link that will link you to a video that will allow you to purchase the book. And also, if you go to the website and look under any of the daily postings as the daily market review or this review, which is the comprehensive review and forecast, we load those up every day the market is open. And you will also see links there if you want to listen to the short video, tells you all about the book, or you just want to go to the link that allows you to purchase it. Please do so. We so appreciate it. It's the way we've monetized our site. We're in our third printing of the book, and we've got nothing but rave reviews on it. We spiral bound it so it's easy to use as a study guide. It costs a little more to do it that way. It's printed on high quality paper, and I believe you will love it. It explains our methods, breaks down emotions, how to control those when you're trading, helps you set up a plan, helps you understand everything we talk about here at the channel, and the long-awaited book is available now. So please support us there. And the extra bonus that we offer you, the 15th of July, we will be putting out that special short chart trading for everyone who purchases the book. Now, what else do we have coming? Well, we're showing you right now the quarterly chart all the way back to literally the 90s. Well, right at the beginning of the year of the 2000s, when we saw the market crossover going down on our quarterly chart. As you trace it, you see that it gets you out of the market when it starts to crash, gets you in the market about midway through 2000 or through 2004, gets you out of the market as it starts to crash in the beginning of 2008, gets you back in the market when the market starts to zoom up back in 2011. We see the Trump effect there in 2016, and of course would have kept you in the market through this latest run up. It's just absolutely beautiful. And at the end of June, we will be providing that special quarterly review. And in order to get that, you don't have to purchase the book, but we would sure appreciate you doing that. But you do need to be a subscriber. How do you get to be a subscriber? You go to chartingwealth.com and sign up, put in your email address and your name, and we will put you on the list. And that is how you receive not only our daily market review, but this weekly comprehensive review and forecast. And you also get all the special trainings, particularly the quarterly one that we put out. So by all means, go there and sign up. Also subscribe at our YouTube channel. That doesn't get you any of the special trainings, but it sure helps us. And we appreciate those metrics that you guys help us with. You have made us, I think we're number 4 in the world as far as stock market and stock trading podcasts go. So we thank you so much to the thousands of people who have watched and subscribed and everything. So let's jump into our comprehensive review and forecast and tell you what we see happening. We're going to go from this magical quarterly chart to our weekly. What do we see going on? Well, we ended the week on the S&P 500 with a red spinning top. What does that mean? That means lots of indecision, tending down. It's not a doji, but it's not too far from it. We also broke through not only the 2-day trend line, but the weekly. Those are major concerns about the market rolling over. We see that the derivative oscillators lost energy. Price percent oscillator is headed down on that weekly chart. On the 2-day chart, we actually see a crossover occurring. Now, this is only the first day on Friday of the latest 2-day candle, but it is interesting. Are things bottoming out? Well, they're hitting around 2 275.20, something like that. So it's been hitting around there now for going on 5 days, but we do see the price percent oscillator crossing over and the derivative oscillator heading down. So that's a major move. We'll see how that continues to play out. We haven't finished drawing that candle yet, so that's a caveat there. And we look at the 4-hour chart, what do we see? We can see where it has been sliding sideways for the last 1, 2, 3, 4 days. So you see where it tapped down again around that 274 mark or so, 274.20, and is really just slidden sideways. Derivative oscillators losing downward momentum, price percent oscillator still heading up. Of course, we got out of our very successful move after we had that prior weekly vertical crossover a couple of weeks ago, and the S&P did move up quite nicely until we saw that crossover on the 4-hour chart going down, which was your signal to take that beautiful trade somewhere around the 274 mark up to about the 279 mark or so. And again, over the course of just about a week and a half, that's pretty good money in anybody's book, again, for your virtual trades. Remember, we're not a stock calling service. We're an education firm. We don't give you market trading advice. We give you education and training for free. Okay, let's keep moving through these charts. What do we see on the Qs? That's the NASDAQ 100. We see it now. It doesn't look like the S&P 500. It's not blown off to the extent. However, it looks like it's ending the week, pushing through. It's, again, showing a lot of weakness. It's broken the 2-day trend line and is trying to break that weekly trend line. What we see going on is the price percent oscillator has gone flat, derivative oscillator has gone flat. Also, for the week, a red open box candle. Again, it's not a red closed box candle, which shows strong down movement. There's even a wick on top and no wick on the bottom, but it does so show some slowing. We look at the 2-day chart. What do we see? Well, of course, we did break through back on the 2-day candle. This latest candle actually just starting to form. Its first half is formed. We see that it's broken through the 2-day trend line and is sitting above the weekly at this point. Derivative oscillator is losing lots of momentum. Price percent oscillator is trying to cross over going down. Has not happened yet. We look at that 4-hour chart and we can see 3 down candles. Again, derivative oscillator gaining downward momentum. Price percent oscillator heading down. And of course, we did, again, have a sweet trade in the NASDAQ 100 somewhere around, oh gosh, what were we? Somewhere around a popping up point on the 1st of July of something like 171, 170, something like that, all the way, well, depending on how you pulled the trigger on and off, you could have topped out somewhere around 175. You could have topped out as high as 177, almost 178. So again, things have been quite nice and rosy on both the S&P 500 and the Qs up until the last few days. So that's where we are there. We are not currently in a trade on the Qs because of that acceleration down. So we took our profits, our virtual profits, and we kept them. Now let's keep moving through. What do we see on TLT? Well, we had a weekly crossover going up, of course, back on the week ending the 25th of May. That following week ending the 1st of June, big bump up. Then we got a doji the following week ending the 8th of June, and we got a green spinning top, which again means indecision, not as much as this prior doji, but the spinning top means indecision, also tending up. And then over the course of the past week, we had an up week. Derivative oscillator gaining upward momentum. Price percent oscillator heading up nicely. We look at the 2-day chart. What do we see? Well, of course, it crossed over going up back on the 24th. Actually, it's interesting how things... Oh, I remember why we set it that way, because we want to laminate. It actually happened on the 25th. When we look at the 2-day chart, we didn't want to laminate, not be able to see the gold. But we have seen it move up for 6 days or so, down for about 8 days, up for 4 days ending on the 19th of June, and then sideways tending down over the last couple of days. Price percent oscillator still heading up but flattening. Derivative oscillator losing momentum. And of course, what do we see on the 4-hour chart? It, of course, crossed over going down back on the morning of Friday the 22nd, getting very close to that in the afternoon and morning on Thursday the 21st. But of course, if you had stayed in, we would have definitely wanted to pull the trigger after we saw things starting to roll over. Again, keep your eye on things. It's not penetrated either the weekly or the 2-day. So again, I do urge you to keep practicing all these things. TLT has been a tough one to trade over the last many months, not giving us a lot of opportunities, but when they do, of course, it's worth jumping in and trading those. Now, let's go back to the weekly chart, and we're going on to gold and seeing how that. Now, remember, gold crossed over back in mid-March going down. Then, right after that, we didn't have a jumping in point because it started moving up, but then started moving down in earnest on the week ending the 27th of April, and has really been tracking down since then. This past week's probably the biggest down candle that we've had so far. Derivative oscillator gaining downward momentum. Price percent oscillator really spiking down. Movement well below the weekly trend line. We go to the 2-day chart. What do we see? Well, we saw it crank over going down back on the 2-day candle ending on Friday the 15th of June. And of course, major down candles since then. Now again, gold was up a little bit on Friday, 0.25%. We look at what happened on Friday, and perhaps gold is trying to find a bottom somewhere around about the 120 mark. It has been sliding sideways since it bottomed out there on Thursday morning. So we'll continue to keep our eye on things. Really haven't had a good jumping in point on that 4-hour chart since things spiked down. If gold is going to take a breather and rotate back over going up, we'll just see how long it does that. We might have another chance to jump in on an inverse trade in gold. If you don't know what inverse trades are, please go to chartingwealth.com and check out the training we have there on inverse ETFs, what to do when markets crash. Folks, that's where we are as we end the week. Hope that you are having a smashing weekend. Please do purchase our book, and we always love to hear from you. Don't hesitate to go to the website. Write to us, cw@chartingwealth.com. You can also leave comments at our YouTube channel, Facebook, Instagram, you name it. We try to be there for you. And please, again, support us by buying our book, Charting Your Way to Wealth. You won't regret it. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.